Welcome to the podcast. Today, we're diving into the world of cryptocurrency trading and the journey from being crypto curious all the way to becoming a digital boss. We'll cover everything from blockchain basics to advanced trading strategies and risk management, really a full spectrum of topics.
That's a lot to unpack indeed. Can you start by explaining what exactly cryptocurrency is and why blockchain technology is so central to it?
Sure. So, cryptocurrency is a digital or virtual form of currency that uses cryptography for security. Unlike traditional fiat money, it's decentralized, meaning no single government or central authority controls it. At the heart of it is blockchain technology, a distributed ledger that records in a secure way every transaction across a network of computers.
hmm
This makes transactions transparent and nearly impossible to tamper with.
Right, so Bitcoin really paved the way, but there are thousands of others with unique features and different use cases now, correct?
Exactly. Bitcoin was the first, created in 2009 by someone known only as Satoshi Nakamoto. Since then, thousands of cryptocurrencies have emerged. Each one, like Ethereum for instance, might offer additional functionalities such as smart contracts or even decentralized apps. It's like a whole ecosystem where every asset can serve unique purposes, from online transactions to fundraising through ICOs.
It's really fascinating, especially when you consider the volatility, high risks, and potentially high rewards.
Yeah,
Could you shed some light on that aspect?
absolutely. One of the main appeals for investors is the potential for high returns. But with substantial profit potential comes considerable risk. Cryptocurrency prices oscillate wildly based on market demand and supply, technical factors, and regulatory news. So while you might see exponential growth, you can also face steep losses if you're not careful about your risk management.
Speaking of risk management, how important is it to have a good crypto wallet and a reliable exchange before you even start trading?
Oh, it's crucial. Setting up a secure wallet is your first step. Think of it as your digital safe where you store your keys. There are hardware wallets, software wallets, and even mobile ones. You need to choose based on your security needs. And then picking a reliable cryptocurrency exchange matters too. Factors like security measures, regulatory compliance, user interface, liquidity, fees, and
hmm
reputation all come into play. It's like choosing the right bank for your money, only it's all out in the open digital space.
Right. And once your fundamental setup is ready, traders get into technical analysis, correct?
Exactly. Technical analysis is like the art of reading charts to decipher price movements. You look at candlestick charts for price trends, support and resistance levels for identifying entry and exit points, and you also use various technical indicators like moving averages, RSI, MACD, and Bollinger Bands. It's a bit like being a detective. You find patterns and signals that suggest future moves. Some people even call it reading the market's mood.
Yeah, that sounds intriguing, but I sometimes hear critics say that technical indicators can be misleading if taken out of context. Don't you think that's a valid point?
Absolutely, and that's a respectful challenge in the trading community. Technical indicators are tools, and while they provide valuable insights, they should be used in conjunction with fundamental analysis and proper risk management. Over reliance on a single indicator might lead to oversight in market sentiment or unexpected news impacts. It's all about balance, yeah.
Speaking of strategies, I understand there are different approaches like long term investing versus short term trading. Could you elaborate on that?
Sure thing. Long term trading, often called positional trading, involves holding onto assets for months or even years. Here, the focus is fundamental, looking at market adoption, use cases, and strong technology behind a cryptocurrency. On the other hand, short term strategies like day trading, scalping, or swing trading aim to capitalize on quick moves through technical analysis. Scalping, for instance, is all about making numerous trades for small profits over a very short time
hmm
span. Each strategy comes with its own risk profile and required skills.
So it really boils down to individual risk tolerance and the time commitment someone is willing to put in, huh?
Precisely. Your trading plan should align with your risk tolerance and goals. A personalized trading plan involves assessing how much loss you can afford, setting clear financial targets, and then devising a strategy, whether that's technical or fundamental, that fits. It might include using stop loss orders as a key risk management tool.
I like that approach. Now, about stop loss orders, can you explain in simple terms how they help traders?
Definitely. A stop loss order is basically a predetermined exit point to cap your losses if the market moves against you. Instead of watching in horror as a trade goes south, you set a price level where your asset will automatically be sold, minimizing further damage. Consider it as a safety net in your trading strategy, especially in a volatile market like crypto, where prices can fluctuate rapidly.
Yeah, that's tight. And what about advanced trading strategies like margin trading or using derivatives? How do they factor into the big picture?
Those move into more advanced territory. Margin trading allows you to borrow funds to increase your buying power, which means you can trade with larger positions. However, it comes with the risk of amplified losses. Derivatives, such as futures and options, let you speculate on the price moves without actually owning the asset. They offer opportunities for hedging and, if you're savvy, can further
Hmm.
amplify gains. But both require a strong understanding of risk management.
Interesting. And diversifying beyond just trading, how do things like staking, lending, or yield farming play into building a robust crypto portfolio?
Diversification is key. Instead of solely engaging in trading, investors can also generate passive income through staking, where you lock your tokens and earn rewards, lending, where you lend your assets on platforms to earn interest, or yield farming, which involves providing liquidity to DeFi protocols. It's all about not putting all your eggs in one basket,
Right.
and this in turn mitigates risk and increases overall portfolio performance.
Now, with all these advanced tools and strategies, there's a lot to keep track of. How important is it to backtest your strategies before going live?
Oh, that's crucial. Backtesting is like a rehearsal for your trading strategy. By testing your methods against historical data, you can see what would have worked under past conditions. This process helps refine your entry and exit points and ensures your strategy is robust against different market scenarios. It also highlights any shortcomings so you can adjust your plan
Hmm.
accordingly. It's an essential step to avoid live pitfalls.
Sounds like the book really emphasizes continuous improvement, backtesting, monitoring, and adjusting your plans and staying educated.
Exactly. The crypto market is highly dynamic. What worked yesterday might not work tomorrow. That's why staying updated through research and engaging in the community is so important. This ongoing education helps traders adapt to, say, new regulatory environments or emerging trends like
Right.
DEFI, NFTS, and Layer 2 solutions. It's vital to be nimble in this space.
Speaking of regulatory environments, how do they affect crypto trading?
Regulations play an enormous role. They dictate, for instance, how exchanges operate, impose anti money laundering mandates, and even affect how profits are taxed. It's really important to keep up with these changes because a sudden regulatory update can impact, sometimes drastically, the market sentiment and prices. Compliance not only protects you legally, but also contributes to solid risk management in trading.
With these constant regulatory shifts, it sounds like a lot of the fear comes from uncertainty.
Absolutely. Uncertainty is one of the biggest challenges. That's why many experts stress the need to always perform due diligence. And if you're ever unsure, consulting professionals or seasoned traders can help you navigate these murky waters.
Hmm. Now, shifting gears a bit, I'm curious about chart patterns. How do traders use them to predict price movements?
Chart patterns are a cornerstone in technical analysis. Patterns like head and shoulders, triangles, or flags signal potential reversals or continuations in trends. For example, a head and shoulders pattern might indicate an impending reversal, so traders might prepare to exit long positions. Sometimes it's like reading a story from the market where each pattern tells you a different chapter of what's about to happen.
Yeah. And these analyses are often paired with tools like moving averages and RSI, right?
Exactly. Moving averages help smooth out price data to reveal trends, and the RSI can indicate overbought or oversold conditions. When these indicators align with a chart pattern, it gives traders a higher confidence in their decisions. For example, if you see a clear pattern forming and the RSI is in an oversold condition, that might be a signal to buy in anticipation of a bounce.
It's like putting together pieces of a puzzle. However, some argue that over optimization is a risk when backtesting strategies. What's your take on that?
That's a valid critique. Over-optimization or curve fitting happens when a strategy is too perfectly tailored to past data, thus failing to perform in live trading. It's a delicate balance. You want your strategy to be robust, but you need to avoid making it too data specific. Testing on multiple data sets can help mitigate this issue.
Mhm.
Really, it's about learning from history without being trapped by it.
As we wrap up, what do you think are some key tips for long term success in the crypto industry?
The big ones are education, diversification, robust risk management, and keeping a long term perspective. Stay curious, continuously research new trends like DeFi, NFTs, and emerging security technologies, and always be mindful of your risk appetite. Also, network with other traders. It's amazing what you can learn from a community of like minded individuals.
Yeah, this conversation really laid out a clear roadmap from the basics to the advanced strategies in crypto trading. It sounds like the journey involves constant learning, adapting, and disciplined execution.
Absolutely. It's a dynamic space where both the technology and the trading strategies keep evolving. For anyone looking to transition from crypto curious to digital boss, it takes continuous practice, thorough research, and of course, never underestimating the importance of a solid risk
Yep.
management plan.
Thanks for such an enlightening discussion. This really helps break down the complexities and offers a roadmap for both beginners and advanced traders alike.
My pleasure. Remember, the key is to stay informed and never stop learning. Until next time, keep navigating that crypto landscape with caution and curiosity.